From US lawmakers to global investors, attention is shifting fast. Not to meme coins or NFTs, but to the stable coins that power real-world utility. If you've ever traded crypto, used DeFi, or sent digital payments, chances are you've used a stablecoin. Welcome to BingX. Today, we're breaking down two of the most important stablecoins in the crypto world, USDT and USDC. But what's the real world difference between them? The two largest stablecoins by market cap, USDT and USDC, play a central role in crypto trading, lending, and DeFi applications. But which coin is safer, faster, or just better for your needs in 2025? Stick around as we compare transparency, security, adoption, and more. Plus, we'll let you decide which one fits your strategy best. Why do stablecoins matter? Before we jump into USDT versus USDC, let's talk about why stablecoins are so important. Crypto is famous for wild price swings. Bitcoin and Ethereum can jump or drop 10 to 20% in a single day. Stablecoins like USDT and USDC are pegged to the US dollar, giving you a way to store value, make payments, and trade without worrying about volatility. As of March 2025, stablecoins make up 13% of the entire crypto market, with a combined market cap of $250 billion, almost double since early 2024. More than 75% of crypto users hold stablecoins, making them essential for trading, lending, and payments. Stablecoins are more crucial than ever for DeFi, payments, and global settlements. This explosive growth isn't just about investor hype. It's driven by rising institutional demand and new pro-stablecoin legislation like the Genius Act.
The Senate has passed its landmark stablecoin legislation dubbed the Genius Act. The upper chamber voted 68-30 to pass the bill, which creates a framework for dollar-pegged stablecoins and a pathway for companies to issue these digital currencies,
which aims to boost US leadership in digital assets. But not everyone's on board, with critics warning about consumer protections and Congress debating new rules. The main question is, which stablecoin should you trust in 2025? USDT or USDC? Did you know that USDT and USDC dominate the field of stablecoins? These two tokens represent over 90% of the global stablecoin market by volume. USDT leads the pack with unmatched liquidity and global acceptance, holding over 62% of the stablecoin market and ranking third in crypto overall. Meanwhile, USDC stands out for its transparency and regulatory compliance, making it the top choice for DeFi, enterprise payments, and US institutions. However, USDC only accounts for around 25% of the stablecoin market after years of competition with USDT, according to Yahoo Finance. Recently, Circle launched an IPO, which created more authority for the USDC brand.
The issuer of one of the biggest stablecoins in the world has priced its IPO at $31 per share, so that is above the expected range of between $27 and $28.
And it's a very, very large gain right out of the gates.
It's nearly tripled in its debut today.
This is a big IPO because the company is worth $60 billion, and they're also going after a market that's worth $248 billion.
Choose USDT for trading power and reach, or USDC for peace of mind and compliance. In this guide, we'll break down how both work, their strengths, and which fits your crypto strategy best. What is USDT? Let's start with the OG. Tether or USDT? Launched in 2014, USDT was the first stablecoin and is still the largest by market cap. It's designed to be pegged one-to-one with the US dollar, and for every USDT in circulation, there should be $1 in reserves held by Tether Limited. USDT is super versatile. It's available on over 13 blockchains, including Ethereum, Tron, Solana, Polygon, and Avalanche. With a market cap over $120 billion, it's the most traded stablecoin in the world. Tether holds nearly $100 billion in US Treasury bills, with most of its assets managed by Cantor Fitzgerald, making it comparable to major countries in terms of reserve assets. Tether continues expanding its offerings, including Emirati dirham-backed tokens and gold-backed stablecoins, with a focus on markets where these assets provide tangible value. But USDT is not without controversy, especially around its reserves and transparency. How does USDT work? USDT is designed to mirror the value of the US dollar, offering a steady $1 price point even when the rest of the crypto markets swing wildly. USDT works on a simple promise. For every token in circulation, Tether Limited holds an equivalent amount in reserves. aiming for that crucial one-to-one backing. This mechanism helps USDT remain a go-to choice for traders and investors who want to avoid crypto volatility, move funds quickly, or access DeFi and payments without converting back to traditional cash. USDT uses a mint and burn system. When you deposit fiat to buy USDT, Tether mints new tokens. When you redeem USDT for dollars, those tokens are burned. This keeps the peg stable. However, Tether only releases quarterly attestations about its reserves, not full independent audits, which have raised some eyebrows in the crypto community. What about USDC? Now, let's talk about USDC. This is USDT's main challenger. USDC was launched in 2018 by Circle in partnership with Coinbase. Like USDT, it's pegged one-to-one with the US dollar, but it's backed by cash and short-term US treasuries with monthly audits by independent firms. USDC is known for its transparency with weekly attestations of its reserves. The reserves are held in cash and short-duration US government treasuries, providing a high level of transparency and assurance to users. USDC is fully compliant with US regulations and is especially popular with institutions because of its transparency and compliance. How does USDC work? USDC is a digital dollar issued by Circle and pegged one-to-one by the US dollar, designed to keep its value stable for users in crypto trading, payments, and DeFi. What sets USDC apart is its backing. Every USDC in circulation is supported by cash and short-term US treasuries held with regulated financial institutions, and Circle publishes monthly independent audits to prove these reserves. This transparency and regulatory compliance makes USDC especially attractive to institutions and anyone concerned about security. As a stablecoin, USDC lets users send, spend, save, and trade digital dollars globally, offering fast, low-cost transactions across multiple blockchains. Its programmability allows developers to build innovative financial applications, making USDC a reliable bridge between traditional finance and the crypto economy. And in 2025, Circle made headlines with its highly successful IPO, boosting confidence in USDC's long-term stability and further cementing its reputation as a trusted, transparent leader in the stablecoin market. USDT versus USDC. Key differences. Transparency. USDC wins here. Circle provides monthly independent audits, so you know every USDC is backed by real assets. USDT only releases quarterly reports, which aren't as detailed. Adoption. USDT is the king of adoption. It's been around longer, it's available on more blockchains, and sees a much higher trading volume, over $1.23 trillion per month compared to USDC's $142 billion. Regulation. USDC is built for compliance, working closely with US regulators and financial institutions.
For years, US regulators handled stablecoins using existing laws without a unified framework,
leaving issuers in a regulatory gray zone. Some, like Circle and Paxos, obtained state licenses and maintained strict reserves, while others, such as Tether, operated offshore. In 2021, the SEC fined Tether for past misrepresentations. Despite these actions, there were still no clear federal rules specifically governing stablecoins. Speed and fees. Both offer fast, low-cost transactions, but it depends on the blockchain. USDT on Tron or Solana is lightning fast and super cheap, while USDC is just as quick on networks like Solana, Avalanche, or Algorand. Which should you choose? So, is USDT or USDC right for you in 2025? If you want high liquidity arbitrage and wide adoption, USDT is your best bet. It's everywhere, easy to use, and dominates the trading market. USDT has consistently maintained its $1 peg, but has experienced brief minor depegs during periods of market stress. If you value transparency, security, audited reserves, and regulatory compliance, USDC is the safer choice, especially for institutions and long-term holders. In terms of transparency, USDC stands out by providing monthly attestations from independent firms like Deloitte, while Tether only issues internal reserve reports and has yet to undergo a full audit. Regulatory risk also sets them apart. Circle, the issuer of USDC, holds licenses in multiple jurisdictions, making USDC more appealing to institutions, while Tether has gotten fines in the past. How to trade USDT and USDC on BingX. Trading USDT and USDC is simple on secure AI-driven platforms like BingX. Just sign up, complete KYC, deposit funds, and choose which stablecoin you want to buy. You can also swap between USDT and USDC directly. Just follow the trading pair, place your order, and you're done. Both USDT and USDC have their strengths and weaknesses, but understanding these differences will help you make the best decision for your portfolio. While they share similar functions, each cater to different priorities. USDT excels in liquidity and market reach, while USDC emphasizes transparency and regulatory compliance. If you find this video helpful, smash that like button, subscribe to BingX, and let me know in the comments which stablecoin you prefer and why.